So Tesla's Q4 report came out, and yes, I know, doesn't look so nice, and the stock is getting a massive hit, and it's down by almost 14% at the time of recording this video. I know, guys, I know. I just made a video on 31st that I am buying Tesla and I'm a Tesla bull, and I'm not ignoring this quarterly earnings. Definitely not. This is what I preach on my channel, that this is how you should be valuing a business. You should definitely not keep your eyes closed and become a bull, a blind bull, and just going on and buying at every level possible. No. We definitely have to evaluate a business at, if not every quarter, then at least on half-yearly basis. And definitely you should be keeping an eye on the quarterly results. And this is what I'm going to talk about in this particular video, but I will keep it short and crisp. So Tesla missed on its deliveries target, and they delivered around 405,000 vehicles with respect to what was estimated by the Wall Street around 425K. And yes, and the other bad thing is that they produced around 439K vehicles. So there was a gap of around 34,000 vehicles. Now this is a big gap, yeah? And this is my point of worry, not the failure on their deliveries. No, this can happen, especially when we knew that, okay, China is having a massive attack on its economy, and China is one of the biggest growth factors for Tesla, and Tesla had to cut its prices. As we know, I think in Q2 or Q3, it already cut its price in China, especially by $3,500, and then it reduced it further to $7,500. So these two things were actually a point of worry for me. Now, like I said, guys, I am a Tesla bull, but I am not just giving you all the every time just the positive information. I'm not a pump and dump stock analyst. I'm not a financial advisor. So I'm looking into a business as I would personally when I am actually evaluating my own stock portfolio. And this is the exact same information which I'm giving out to you guys and to my patrons as well. Okay, so these are the 2 points which actually made me quite worried when I saw the big difference between their deliveries and production and their price drop in China. So like I said, this estimated miss in deliveries is not at all bothering me. Why these two factors instead are bothering me is because for a manufacturing kind of a business, yeah, for an automaker, when they have growing inventories, yeah, and their pricing power is reducing, these are the two important signs for investors which they should be looking out for especially a manufacturer and an automotive industry. So this is what's happening with Tesla right now. And like I said, Tesla reduced its price in Q2 by $3,500, and they further doubled it down to $7,500. This shows me, or shows investors, that they were too much pressurized to actually meet those estimates. Yeah. So this is kind of worrisome for me that they are reducing their prices, and they would have to do it continuously in China to hit those targets. And this is the point where I am a bit worried, let's say. On the negative side, I'm a bit worried because, like I said, this will definitely then affect their margins, their gross profit. They were having a gross profit of around 28 to 30%. And if their variable cost, which is in the manufacturing side, a fixed cost and the variable cost. So variable cost depends on the deliveries, okay? But their fixed cost, the fixed costs are fixed, yeah? And this will affect their margins because their fixed cost will be according to their production. And if the demand is lower because of what's happening in China, let's say, and all throughout the world, and if the demand is getting affected, that would affect their cost. The fixed cost will always be there, and therefore their gross margin will be reduced. And margins, according to me, are the most important things for a business, are the most important things for any kind of a business. And especially in case of Tesla, I was so bullish on Tesla, and I still am, but it was only because of their exceptional margins and their growth. Yeah. Also, when we are talking about their growth, which they expected to be at 50% year over year, didn't reach. Yeah. Many Tesla bulls out there are evaluating Tesla on the basis of this 50% year over year top line growth, but it didn't happen. But now let's talk about the positive side, okay? Tesla already warned us that this won't happen in quarter three. It's okay. And about the margins, we have to look in for the margins in 2023, how the margins will be affected because of the lower demand and therefore higher fixed cost and cost in production. Tesla, on the other hand, has a huge, range of margin. That means they can still weather this storm of lowered demand. And that's what I covered in my previous video, that Tesla has this huge range of margin that they can really, even if the demand has been slowed down for a year or two, they can still stay profitable. Their margins won't be so good, and for these 1 or 2 or 3, even 3 years, these headwinds will remain. But in the end, Tesla will flourish because the demand will eventually go back up where it was in the previous years for Tesla, let's say previous 2 to 3 years. So this is what I wanted to cover in this video. So I'm not panicking at all, but like I said, there is a negative side. But in my opinion, yes, this negative side is a short-term negative catalyst. But in long term, when the demand is back up and China is fully open and we are through this Ronda situation, then of course Tesla will flourish again. And that's why I am still buying Tesla. In fact, this is an amazing opportunity in my personal opinion, guys. I'm not pumping up this particular stock. I'm just giving you guys my personal opinion. So I am buying Tesla, even if it goes to $75, which is meant to be its technical support. I am happy to buy more Tesla. Why wouldn't you? So that's it, guys. That's all. I will see you in the next one. Until then, stay safe, stay happy, and ciao.